This is our Forex blog for August 28th, 2013, and I like to showcase what I consider the absolutely easiest way of trading. The easiest way of trading is to monitor, like we do, every single currency and know which ones are the strongest and are going up and which ones are the weakest and are going down, and simply buy the strongest versus the weak if the strong is on top and the weak's on bottom, or if the weak is on the top of the currency pair. For instance, the euro as it's trending down here, versus the dollar, which is on the bottom, then you sell the weakest versus the strong. It's that simple. And what's beautiful about the currency index is it gives you a wealth of information. It lets you see if what the previous day's high is in the euro index, and you can see the euro went up today and couldn't get stronger today than it was the previous day. And 2 days ago's high was also right there, as you can see. It flips, right here, and you can see it's slightly higher. And so it's not able to go higher. So this is very high probability of a reversal. And you can also see when trend lines are getting broken at 640 or 635 right here. The dollar's trending up. It's not above our upper white band, which is way up here, so it has some more room to go. The yen's also trending up. It found support at the point of control for the previous day, which is a very high probability support resistance area. You can see the dollar got above it and it held as support. This is where most traders had positions in the dollar for the previous day in all the dollar pairs. Very key. Above that you want to buy, below that you want to look for sells. So basically the yen broke out from underneath to above its hourly right here, and it's got a long way to go up to the upper containment bands, which is typically where currencies kind of stall and reverse most days. So you could look for sells in the euro dollar or euro yen at 630. Here is this chart of the euro dollar at 630, and you can see it was already trending down. It has a nice little kind of wedge pattern right here, and broke down and went from around 65 all the way down to 40, 25 pip move. And then you got a nice little pullback here. You might have got into a trade with a small loss, got another short right here, and made a huge profit on the next one. Let's take a look at the euro yen. Again at 630. We know that this one's likely to continue down. And the yen kind of worked its way up for about 20 minutes before it broke out. And that's why, it's not my preferred choice, because I don't like to, once a currency's already fallen 20 pips, sell it. So I would have probably passed myself on this. It's just not worth the risk to me. But that's how you can trade this. And once you're in the trade, if you see the dollar's still going up and the euro's going down, you can stay in that trade until about 8 here when the euro starts to go back up. A lot of times when you see trends, you wait for a pullback, up in the euro, it runs out of steam and starts to go down. You want to sell it again against whatever currency is strongest. Now let's take a look at the pound here. First of all, you can see that the high of this previous swing, it wasn't able to take it out today, and it's kind of chopping around here. You can also see the previous day's low. And if you notice, the daily trend's down, the weekly trend's down, the monthly trend's up, but that's not nearly as important. So seeing that it made a double top right here, pulled back to the hourly, went up a little bit, and broke it right here, 430 is a great place to sell the pound. It's very high probability. It wasn't able to even get back to the high, let alone break it. Pulled back to the hourly, which is, if it's going to go up, it's going to find support here and go back up and break this high, and it didn't. So this is pretty much a no-brainer trade right here. You want to sell the pound versus whatever's strongest at the time. The euro's strong, the dollar's strong, the yen is weak at the time. So let's take a look at pound dollar at 430. Pound's weak, dollar's strong. In this case, you can see, again, the currency's fallen for about 40 minutes right here. And you didn't really have to pay down too much to get into this trade. And when you do pay down, this is what oftentimes happens. It goes down and kind of stalls and goes sideways and sometimes shoots back up, and you have a lot of unnecessary losses. You may or may not have gotten into this trade here. If you spotted it on the chart, you might have gotten short a little bit before this break. That's good. and you can see virtually no pullback at all, breaks this level right here, and then falls from 90 all the way down to 50. Huge move. So that's how you can use this to trade with the trend, and you can also use it to trade counter trend too. For instance, one of my favorite things is to draw the fibs and also trend channels on these. And then what you do by putting the trend channel on there, you can see the low here, the upper trend line which is projected off the low hits here and here. And when the price comes up above that trend channel and hits our containment band, what a great place to do counter trend at 10. So what currency is maybe down too much and likely to reverse up, or has shown some strength? Now the pound has shown incredible strength, but it's at the upper containment band, so it could easily just kind of go up a little bit and go sideways. It's not likely to explode up. I like the yen of all these because it's at a double bottom right here. So I would consider a dollar-yen sell coming up to 10. I try to play the ones with the highest odds. It isn't always the one that's going to make the most pips, but it's the ones that's most likely to pull back a little bit. You can see on the chart right here at 10 o'clock, it pulled back 10 pips, went up a little bit, pulled back, went up a little bit, kind of pulled back a decent amount there. The euro also was down a lot, so the euro dollar coming up to 10 o'clock is likely to get a bounce. And you can see having that on your chart, and especially when you add our other tools like our containment bands, I would put the 1.5 and 2.0 band on here with a DSP. And especially at and beyond the 2.0 level, you're probably 80% likely to get a bounce. So this is underneath the 2.0 level. It's very high probability. Now if you want to add to your probability even more, you can actually use our upcoming FX trade signals that tell you when to buy and sell. Notice we're looking for a buy at 10 based on the currency indexes. When you combine our currency indexes with our signals, in my opinion, I'm doing this not only for my own automated trading, but for signals for new traders, so they don't actually have to learn all this stuff. You can just, hopefully you'll use our currency indexes and focus on the strongest ones versus a week, but you also learn some counter trend methods like I'm showing now, and then you wait for the signal. So let me bring that up so you can see it. Here's our currency trade signals. And you can see today just absolutely did extremely well. This one here went up a little bit. This one here, made a really huge move down. This low right here had 3 different signals all generate. There was a trade right here that did go down about 10 pips. Another one here, 10 pips. This one here, fell down a lot. It bought there, sold here, bought here, went up a little bit, bought here, went up a little bit, sold here, went down a little bit, bought here. But the reason I brought this up is to show you that coming up to 10, we're looking for buy signals, right? And you can see there are 2 of them. Oops. Right there. And right there. I don't use that arrow that much. Let me try that again. I'll just draw it on a little line on there. You can see one signal right here and another buy signal right here. They're just going to show arrows on your chart. But when you use the currency index to know that the dollar is likely to go down, the euro is likely to go up, and then you look at the euro dollar chart and you actually get 2 buy signals. The first one, kind of went up about 10 pips. The second one went up from 10 all the way up to 35. You have a nice 25 pip move here. And one signal that did not show up because it's not in our existing method. There's 65 different rare patterns that this uses right now. You can see search expansion trade number 7, other trade 3, Fibonacci 4th Fibonacci pattern, Fibonacci pattern 3, which is a Fibonacci profit target. If you draw your fibs off of this last move right here, you got fib targets down here, and that's one of the reasons why we're buying here and buying here. I use Fibonacci retracements and fib profit targets. Counter trend trades are usually based on Fibonacci profit targets, and only when the swing is, probably 35 to 55 pips is when I will look to buy counter trend. Also, underneath our lower bands, very likely to get a reversal. So this is an easy way for new traders to trade. Use our currency indexes. When the trade signals come out, you can see that, I'm actually risking my hard-earned money on automated systems using these same exact signals. In the software, you will have the actual buy and sell arrows show up on your chart, and you can manually decide to take the trades or not. And anytime you get a buy signal and it's at a support level, it's more likely to go up. This sell right here, very likely to go down because we have the previous week's point of control right here, which is a major resistance area coming up to it from underneath. You can see it also acted as resistance here. And so, it's that simple. This buy signal right here is very likely to work because we already broke it earlier and then rallied up, came down to that level, and, statistically it wasn't quite as weak as it was before. You can see it's a lot less weak than it was before. I'm using a lot of tools on here. These signals, different ones use different tools. There's over 30 different indicators with various settings. A lot of times it's the same indicator with multiple different settings. Different indicators use different ones. If I showed you all the different indicators that these 65 plus signals are using, it would be so many lines and indicator panels on the bottom that the chart would be unusable. One other thing that we're putting in the software is if you hold the control key down when you resize the window, it will keep the panes the same. If you let go of the control key, you can see the bottom panes get bigger and smaller. If you want to hold it in, you can make the top part bigger and keeping the indicator panels on the bottom the same size. Let go and it gets bigger and smaller. I move my charts around so much now that I'm programming all these signals that I had my partner put that in. So that'll be in the next version as well, which I absolutely love. So that's it for today's blog. Hopefully in the next week or two we will be releasing these signals and it should transform your trading.